Welcome back to Firewatch Business, and it is my pleasure to have Ronnie Goode, CPA, on with me today. And if you're not following his YouTube, that is something you need to do. He gives out just great advice for people who are willing to learn and willing to listen, especially for small businesses. And that's what we focus on here. And just appreciate your time. I know you're busy, and I appreciate it so much, Ronnie.
Yeah, thanks, Jason. Definitely thank you for having me on here. So it's a pleasure.
Well, I'm going to dive right into it. You're a CPA, I'm a CPA, so we have that kind of bond there. But on your YouTube channel, you're very specific on certain things that you talk about. And one of the most recent ones that just I was not going to start off with this before until I saw it. I guess I saw it maybe a couple of days ago.
Mhm.
You were talking about tax strategies. And you were saying everybody wants, and this is so true about YouTube, everybody wants that one silver bullet to save them to zero taxes. And that's just not the way it works. And I love your explanation in that YouTube short that you did. I encourage people to go watch it, but it's just to the point. It's not just that one silver bullet. You're talking about a strategy, and you need to know where you stand.
Absolutely. So, and being in this space for a while and kind of owning my own, accounting firm, Rhythm Accounting, we do kind of tax advisory work and we work with small business owners and we work with real estate investors as well. So, after doing it, in the beginning, you start talking to people, we all kind of start off, well, most of us start off as just preparing taxes and things like that. Then we get to a place where folks start to need a little more help with their tax bill. They see these tax liabilities, they're like, oh my God, what is happening? And it's always like a surprise too. But when I first started, folks were, they were wanting me to just give them just a whole bunch of strategic things. Just give me some tax strategies. Just tell me about some stuff. And I used to always have to bring them back to a place where, first of all, let talk a little bit about what you are currently doing, what you plan on doing, in the next year, then what you're planning on doing years from now, because we need to customize some of this stuff to you instead of just giving you these random things, because everything sounds good on the internet. All of these strategies sound amazing. There's some good marketing guys out here that kind of talk in the tax space and they sell this type of stuff and it gets everybody excited. But what I've found is that, I need to know specifically, about your situation, how many kids you got, are you planning on starting a business? Do you got W-2? Is it high W-2? Are you investing in anything? I need to know all of those different things so that I can customize strategies to you instead of just throwing a whole bunch of random things at the wall and seeing if it stick.
And it goes along to what their goals are. Like you just said, you got to know what their future, what they want in the future.
Absolutely. Yeah, it's a lot of folks, because so how we always approach like the tax planning thing, it ultimately at some point in time we try to get you to lead to building wealth at the end of the day, because of course this, but taxes can rob you of your wealth. It really can, or it can help expedite the accumulation of wealth. It depends on if you manage it though. A lot of people just let it happen to them because they don't think they can do anything about it. So, I'll need to know ultimately what are your plans for the future. And a lot of people, if you start talking to them long enough, they'll say, well, we're doing this right now, but ultimately, especially on the long-term planning, we want to retire in this amount of time. I always get that, okay, in this amount of time. I'm like, oh, okay, so now we need to have discussions that will, handle some things in the short term, but ultimately lead to that at the end of the day. That's where you kind of start seeing, when you start talking to folks. Yeah.
Yeah, and it's better to start that earlier than later.
You hit the nail on the head. Oh
So
my God. Especially if we're talking about investing. Oh Lord. Even, I do pretty well personally on it from investing, stocks, real estate and things like that. But just if I would have known things even 10 years earlier than I've known things, you know what I mean? If I would have
absolutely.
gotten in the game even earlier than I did, because you start doing calculations and you see that those opportunities that you missed out on, you're like, man, once you get in tune, that light bulb starts, you be like, oh, I should have been doing this a long time ago. Getting in there early is extremely key when it comes to investing.
One of the things you talk about is real estate investing. You talk about that a great deal on your channel. That is a
Hmm.
huge thing on YouTube is arbitrage Airbnb or arbitrage, all these things, go buy you two properties and uh, life hack it where you're in one half of the duplex and the other. All those great stuff. I mean, yeah, if you can do it, right? But when we look at this stuff, it's not an easy fix. That's where an expert comes in who's seen it all. And you, as an expert, and you're in the real estate business as well,
Hmm.
you know, I mean, my first thought is go to a professional, go to somebody who knows what they're doing and talk to them.
Yeah, I always tell people, and you'll see some of this on my content as well. I always tell people to talk to a professional. Please, folks are very, I don't take that type of risk with my money. Folks take these kind of risks. They rather Google some stuff and just go after it, or they just hear something online and just go after it. I always warn people. I say, hey, if you see something online, great, that kind of spark your interest, that kind of gets you going, that plants a seed. You can go look it up yourself if you want to, but the tax code can be confusing, right? Trying to look at it and read through tax code, it can be, especially if you go to the actual like statute.
Right.
Statute, oh my lord. It's like Shakespeare, the way it reads. So you'll be confused, but at least take what you heard to a professional before you execute. You know, because at the end of the day, what happens, and I've seen this, I know you've seen this as well. When we get people that come to us for help, we have to help them unravel some of this stuff that they've already done, right? We got to
Absolutely.
pull some layers off of this stuff. We got some entities that they shouldn't have created that they created. They made some elections that they may not have been ready to make the elections for. Oh, we got this random C corp. I'm like, C corp. Why do you need a C corp? There's special circumstances for that type of thing. Did you talk to somebody? Like it's all kinds of stuff. That we have to unravel, and it costs money to fix a lot of that stuff. And I see that all the time where folks are, especially if we're talking specifically to real estate, how they entities that they put their real estate in that they shouldn't put it in, because they think they're doing it the right way, and then we have to unravel and fix some of that stuff, and next thing you know, we got these tax liabilities that we're
That's
dealing
right.
with just to fix it.
Right.
Yeah.
It's not just an easy delete and
Oh
reset.
my lord.
And
Not at
and and
all.
we're going to say it again. Best thing to do is get started early with a professional rather than having to unwind this stuff.
That's a fact. That is 100% fact. Get started early with the professional. It's going to actually save you money. Trust me. I know people kind of look at accountants and CPAs and things like they think we are an expense, but we really are a profit center at the end of the day. When you look at the return that you're going to get from working with us, because it's going to cost you to not work with us if you really kind of do the analysis on
And I'll say this,
it.
that
Hmm.
when somebody comes to you, and this segues perfectly into my next thought and question, is
Hmm.
that when people come to see you and they're down the road ways or so, you got to help them out, uh, and knowing your numbers, right? You're not just an expense. You're somebody that's going to give them advice based on facts, on a consistent financial statement, and help them guide them on their business through the financial statement.
Yeah, but at the end of the day, I can't even, let's say we do have heavy tax advisory stuff. We can't even do our job if your numbers aren't together. I can't even assist you if you don't, if your numbers aren't together, they're not organized, and we can't read them. Because the numbers are going to tell the story at the end of the day. But if I don't have that, that's the foundation to everything, to be completely honest, right? We need the reports. I'm going to ask you for financial reports. I'm going to ask you for probably prior year tax statements that are probably based off of financial reports. So if I can't even get that information, I can't even assist you with your tax bills that you're working with or trying to do something strategic. I can't even help you until I get that from. If I don't have that, we can't even move forward. So that is extremely important. I always tell people, I said, numbers are extremely important because that tells the story. That gives us indicators that, tells me what's happening with your life from a financial perspective. And that can help you make decisions. But you got to give me that foundation so that we can make some decisions, because without it, I can't make decisions for you.
And I've seen this, and I know you have too. Is I had
Yeah.
a client once that had a chart of accounts that was just off the charts huge, right? He had 4 different office supplies and for different things that he wanted to track. And I said, "That's great." I said, "But is it being consistent?" He goes, "Oh yeah, my bookkeeper's the best. She's the best." So okay, let's pull the GL and let's just look at it. So it doesn't matter if you want to track it, is do you have the people that can track it? And it's
Mhm.
foundational, right?
Oh my
It would better
lord.
to have a good number in one account than bad numbers in 4.
Absolutely. Absolutely. You almost create more work for yourself at the end of the day. Just handling books in and of itself is already a task. Especially at a certain level. Once you start to grow and scale a little bit, you start to have more different types of transactions happen. It started to become a task. So you don't want to create more work for yourself by dividing these accounts into fours and sixes and things. Like, it's really not gonna, shaking your head. It
It's
was
not
really,
going to help.
yeah, it's not gonna help you at all. So make your life easier. Make your bookkeeper's life easier. Just have a simple but effective and clear set of books so that everyone can kind of assist you, because everyone's going to rely on that. You're going to have to rely on that internally, first of all, to help you make decisions and things like that. But you may have some external stuff, like taxes is one thing. Externally, we got to report to the government. We're going to rely on your financials. Or let's say if you're trying to get a loan or something like that, or a mortgage, and you got a business, right? They're going to want you to produce some financial reports. So that's another external party that has to rely on that information. So if it's not accurate, now you might miss that mortgage that you're trying to get. You know what I mean? And you're trying to get this nice house for your family, and you might miss out on that. So it's extremely important.
It absolutely is. I tell people that all the time. It's like, this is just crazy that
Yeah.
it's a side thought until January and you come in with your shoebox full of receipts. You can't remember what happened last January, man,
Oh
when you
my
were
God.
stressing pulling all your books, all your receipts together.
That breaks my heart. That January and shoebox, that breaks my heart. Oh, back last May, I think I'm like, oh my Lord, this is gonna be a
Yeah.
long day. I send them back now. I've gotten to the point where well, you guys figure that out, and then when you're ready, come talk to me, and we'll take care of you.
And quite frankly, that's really the only way you can do it.
Yeah,
If you want to give them sound advice,
yeah.
either you got to have the right numbers and accurate numbers, or they need to go back and do it again.
They need to go fix that, and we used to have so we used to have a bookkeeper internally that when we used to offer that service, but we used to do like cleanups and stuff for folks,
Yeah.
and they were like, oh, it cost me this much. Well, I mean, that's the mess that you created, unfortunately. So it's going to cost you to fix it.
Absolutely. I worked for a CPA firm
Yeah.
uh, before I went out on my own. And one of the things they did was if you came in and allowed them to do your bookkeeping, that was one price. But if you came in for cleanup, it was
Hmm.
2 or 3 times that. So
Mm-hmm.
just trying to convince them that it was better for them to do the bookkeeping all year long, because it saves they don't want, hey, as a CPA, you don't want to clean up their books.
I'm not touching it. I don't want to go through
Yeah.
that process. It's folks that love to do that. It's some folks that love to do that, but at the end of the day, it's still an expense to you as if you're a client. Like, it's going to cost you money to fix a mess. So it's better to prevent. We want to do preventative measures. We don't want to, have to try to clean up some stuff because it costs money.
So as a CPA, you have a story or many stories probably about businesses and the startups. And how often does somebody come in, like my somebody that's watching this channel is now saying, you know what, I'm starting this side hustle. I want to get out of my 9 to 5. I need to go see an expert like Ronnie.
Mhm.
You've seen this happen a million times for people to start up businesses. I have too. And they don't make it. They don't fulfill what they want to do. When that happens, what is the number one reason do you see that they just don't make it through that first part?
In terms of starting up
Yeah,
their business,
yeah.
I probably got a couple different reasons. So I would say I'll start at a high level first. I would say overall, they don't treat it like a true business overall, meaning they don't treat it like its own separate entity, which they're commingling personal and business stuff. They're not treated like its own separate entity. They're not getting all of the necessary things to separate it, like your EINs and your whatever entity you're going to create for it, and its own business bank account and all of that, all of that stuff that comes along with that. They're not handling all of that structural stuff on setup, and they're not operating it like a business as well. So that's typically, when I see the biggest issue for people kind of failing, I guess, so to speak, is them not treating their business like an actual business. They kind of halfway doing it. You're gonna always kind of, if you don't show it love, you're gonna always run into issues from a business perspective. But I would get that structure in place and get all of the administrative stuff, and then your operations and your reporting. So I'll look at it from those three standpoints.
So you think that they're not treating it as a business, which a lot of people don't. They'll go in and say, hey, I'm just going, I got $1,000 in that account. I need to new something, or my anniversary's coming up. I need to take her out to eat. And then they just take it right out of the business account. You just can't do that.
Mm-hmm.
I don't understand why people don't realize that after so many years. And maybe it's just because of the business we've been in and the business we are in that we just think that way. I
It's
don't
a
know.
pain, if you ask me. It's a
Yep.
pain every time I see it, especially, and to your point, for folks that have been in business for a long time, like, better. I have, it's a guy, he's a good guy, but he's been in business for a very long time. Serial entrepreneur. He's had multiple businesses, have done well. You know, it was a pain for me to try to get him to do things properly, and I had to show him, like, hey, you're hurting yourself by moving this way with these businesses. You're still treating them as if it's just something that you kind of, on the side, is you're not treating it like it's actual business, and it's generating income for you, like significant income. So it's time for you to start treating it like a true business, with having all, like I said, have everything separate from you. That's the purpose of doing that. Plus, even, if we're talking about LLCs and things like that, because that's typically from an asset protection perspective, it protects you from being personally liable for the debts of the business. You can lose that protection by not operating your business appropriately, right? Not
Absolutely.
showing that separation. You can lose that whole LLC protection if you don't do it like that. And I had to explain it to him. I said, you defeat the purpose of the LLC, because you're not creating that separation between you and the business. You're not operating it properly. So I had to walk him through this whole thing. I said, hey, here's the three things I want you to focus on. Let's make sure everything is structured and set up properly. So we went through, looked at his entities, looked at, all the administrative stuff, business bank account, EIN, business card. I said, you need to start using your business card. Start swiping and stuff. That's going to make your books a lot easier, because when we sync that bank account to your books, it's going to all like populate. It's going to shave some time off for you. I had to convince them to do this type of stuff. Then I said, when your bookkeeper kind of does your reconciliation, this will be nice and easy. They can get your business bank account. It's going to be smooth. Then I had to just explain things. And when you go to the store and buy some stuff, just snap a picture of your receipt, let it be attached and all of that. The technology helps you do that. They'll attach it for you, all of that good stuff. And when it comes time for taxes, get into the mode of regularly receiving your report. So if your bookkeeper is not getting it to you, make sure you get into the mode of receiving it. I like the monthly frequency, but I told him, I say, at least on a quarterly basis. But I like monthly. And if you really want to know your numbers as a business owner, like personally for me, and whenever they're ready. So I'll check it on a weekly basis if they're ready, just so I can know where my business is at. But for most people, I say at least on a monthly basis, if you can get it, if not monthly, quarterly, get into the rhythm of doing that, because that's going to help with your reporting. So you're not scrambling during tax time. You say, oh, Ron, here we go. Here are all the financial reports right here. So you cover your structure, your operations, and your reporting. Once you kind of handle that, you get into that mode. Now you're really moving like a business owner, truly, you know. So
And that leads me right into this. How you're looking at your stuff whenever it's ready. So if they got it ready for a week, a month, how just explain to people how important it is to review those numbers.
So the numbers are everything, and I'm not saying this, and we're not saying that just because we're CPAs, but numbers are everything. That tells me everything I need to know. That tells me, how I'm spending, right? What my profit margins are. If I'm spending too much in one area versus the other, okay, we're spending a little much in, you know, maybe our marketing is too high. I don't know if you can do too much in marketing, but maybe our marketing, we're spending too much on the marketing side, or more than normal. Why is it costing us more? Because this is eating into our profit. Like, where are we spending our money? Okay, we got some favorability within our finances, so we can do some travel. We may be able to offer some bonuses to some employees at the end of the year that we want to take care of. May be able to do some of that stuff. Our numbers will tell us that, or if we're not gonna meet our budget for the year, because we do like a budget towards the end of the year for next year, and the revenue goals that we want to hit. So I'm tracking that closely, because I need to know if I need to hit the gas or come up off the gas a little bit with our leads and things like that. That tells you stuff. You need that to be able to operate your business. That's why I said internal reporting helps you make decisions. It is extremely important.
And it is. I love this one, and I'm sure you've heard this too. Is they come in, I'm making, $100,000 a month. I ain't got no cash in the bank. I was like, well, let's look at the balance sheet. Let's look at AR. Who you got calling these folks?
You're not collecting. You got
Credit
revenue, you're
habit.
not collecting. You're cash poor. What they say, I think the saying is like, revenue is vanity, profit is sanity, but cash is king.
That's good stuff.
Because right, you got to pay the bills. You got to meet payroll, right? You have, other creditors and things like that. You got to pay the bills, but it can look good, on paper, but the money is not hitting the bank. So let's start collecting some of this stuff. You're aging, right? The aging, your AR is aging over a certain amount of days, and we need to collect this cash so that you can have some money to spend. Otherwise, like the hardest thing, in my opinion, is when you have people that you're responsible for paying. When you got some employees that you're responsible, I don't care how many employees you have, even if it's just one. If you got somebody that's relying on that paycheck, man, that is a tough deal to not be able to make payroll. So you better do everything you can to make sure you have that cash that you're collecting on your outstanding receivables, so that you can at least make payroll. Because that's a painful thing if you can't do that.
So in your business, and you see somebody like this, somebody that's
Mhm.
like, I know you've seen it, and look at their, and do you sit down and you say, hey, you got to start collecting, and that's just not in their wheelhouse. They don't want to do that. They don't want to call people for money. I had a client that was this way, and you're like, well, somebody's got to.
Yeah, I mean, if you don't want to do it, hire somebody to do it. Pay somebody to do it. Get an independent person that can track some stuff down for you. Get a hire VA. Like my VA does a whole bunch of different things for me. So
Oh yeah.
hire somebody that can make some phone calls and follow up and stuff like that. Because you need to focus on taking care of the business or working on the business. Let them, follow up on, just give them a list. Oh, here are all my receivables. These have been out here for these many days. call all of these people, send emails, keep following up, so that you can get those things collected, because you need the cash, because you have things you have to pay for, right? So that's why I'll show a client, I'm like, hey, you have things you have to pay for, but you don't have the cash in the bank. There's a disconnect. Okay, let's pull that balance sheet up. See, your revenue is high. Your receivables, oh, they're also high. Okay, you're not collecting your money. Let's get to that.
That is right. And like you said, I mean, and I say this a bunch because a lot of people are like, I don't have the cash flow to do that. Maybe you don't right now, but maybe it's worth it to invest in your business there because it's something you're not great at and you need that expert help. It will save you money and make you money in the long run.
Yeah, I believe in, especially in the beginning, if you are a new business owner, and if you're trying to scale, I truly believe in reinvesting. I truly believe in reinvesting in the business. And of course, it depends on your specific situation. We all kind of got certain circumstances, but if you can initially reinvest in the business, like spend that money, don't try to enjoy it all. For a very long time, when I first started my business, I wasn't taking any money from the business. I was reinvesting. I took that, I was putting it right back into it. Like I said, a big thing for me is like marketing. Marketing is a big thing to get in front of people, to get leads and stuff like that. So I'm like, yeah, let's spend on marketing. Let's spend it. Let's buy a couple pieces of equipment, because I started doing content, cameras and lights and stuff like that, microphone, right?
Right.
So I'm like, let's reinvest into the business, So you may have to do that initially and spend the money. You just got to have foresight to know that eventually it's going to lead to you growing at the end of the day, but
Absolutely.
people are scared to do that. You get that profit. They're like, oh, we want to spend that. We want to take another trip, which is fine. Depends on your goals, depends on your goals at the end of the day. If that's what you starting your business for, perfectly fine. If you're starting your business to grow into something else and you want to leave your 9 to 5 though, right? That's a whole different approach. Now you reinvest and scale till you get to the point where you can replace your 9 to 5. So it depends on your goals at the end of the day.
Absolutely. And there's a different plan if you're scaling to build a legacy and scaling to sell. It's a totally different plan.
That's a great point. That is a great point. I got a couple business owners now, who business, they have an established business. They had it for a while. Part of their retirement plan is to sell their business. They want to actually sell their company. And they, like you said, that was their goal. So it was a whole different approach for them. Some of the things I just throw out there, part of it was removing themselves from the business slowly, from kind of working in it, so
Yep.
the business wasn't very dependent on them as an individual, because folks don't like to kind of, buy those type of businesses that's dependent on that one person is driving everything like that. So that's part of the goal. You're like, all right, so we need to start replacing ourselves. So that calls them to do some strategic hiring, like higher level hiring, have hire the operator that can kind of take over some of this stuff, and you can kind of move yourself from it slowly, so that it'll be a little more valuable and kind of drive the value of it up, so that when folks are ready to buy it, it's like, okay, I can buy this business. I don't have to worry about this person being the face and all of that good stuff. Yeah.
Right. And then you've already got the salary built in there. So they can say, oh, this is how much money it's making. I know I can buy this and cash flow it and not have to be there day in, day out.
Oh, that's a beautiful thing. That's a win-win right there.
Yeah,
Yep,
no
because
doubt about it.
right. You're trying to get out of the business and you retire, and they're trying to buy a business that they don't have to be in, and all of that good stuff. Yep, I can cash flow and get some profit off of it. That's a good deal both ways.
So when you're looking at when a new business comes in, a new business that's starting up, what are the key performance indicators that you focus on right off the bat?
Well, right off the bat, I always look into the initial investment. First, I need to know what type of business is it going to be. So if we're talking about a service-based business that's just starting off, service-based business, I know the initial investment won't be, it won't be a lot of money initially in a service-based business. So I can look at, how they're doing from a revenue sales perspective on the service-based business. I can kind of look at that. I know they're not going to have a ton of expenses, so if I'm tracking that, that'll kind of give me a nice little number. Their profit is going to be high because it's service-based. But the thing is, with service-based businesses, what I always notice is that at a certain point in time, you know, um, especially if it's a professional service business like us, right? If it's a professional service business over time, service businesses, I would say, are not as easy to scale as product-based businesses. You know what I mean? Because you need people to scale a service-based business. You need people, at a certain point in time. Now, the internet has changed some of that where you can kind of, sell your knowledge and stuff like that. But if you're just going to deliver the service that we normally deliver, you're going to have to, have some people. So with service-based business, I'm always looking at, what's happening with the revenue and how the revenue fluctuates throughout the year, so I can get a better idea of how this business is going to operate. Because some businesses they peak in the summertime. It really depends on what type of business it is. I'm like, okay, so I'm always looking for that trend in the summertime for the revenue to go up. So if it doesn't do it in that summertime, I'm like, okay, what is happening? That seasonality, I'm not seeing that baked into the numbers. What is really going on? Because the numbers are going to tell the whole story at the end of the day. That's service-based business. If I'm looking at like a product-based business, I'm always going to look at the inventory and how that's turning over, all that good stuff, right? And what you're spending to make it, like the materials and stuff. I need to kind of know a little bit about what it takes to make whatever product you're selling. So I'm always going to kind of look at that because the margins are a key thing when it comes to like selling a product. Mar- Margins are huge, so I need to know, all right, so if I see the profit margin kind of go down, I'm going to ask questions. I'm like, hey, profit margin went down. Our we still sales price is still the same. I know are we doing a discount? Like what's going on? Or are we spending more on the materials to get to the finished goods? So those are a couple of things that I initially look at.
I don't think business owners understand inventory turnover because that's a key factor of getting that stuff off the shelf and turning it into cash.
Quickly.
Yeah, I mean,
Yeah.
I work. I'm a proud Hamburger University graduate.
Hmm.
I worked for McDonald's for 20 years, and that was one of the things that we looked at month in, month out, was how many times we turned over that inventory, because that was how we knew then how much money we were going to make if it was going to be a good month or a bad month. It's just
It's
so important. And I don't
it
think
is extremely important.
I'm not sure that small business even understands what that means.
Yeah, but I would highly suggest that they get familiar. It's If you are the business owner, get familiar with a couple key indicators of your business based on what type of business you have and how it operates and things like that. Just have a couple key indicators that you are always looking at and tracking. Make sure you kind of understand them. Talk to a professional. They'll walk you through it. They'll help you kind of explain what this number means. It's taking you this long to turn over this inventory. They'll explain that to you, and explain the relationship, with all of the accounts as it relates to that on your financial. They'll explain all of that to you, so you'll know, when things are lagging or something like that. What's a bad result when you're looking at your KPIs. You'll know that. But as a business owner, you should have your key ones that you are always looking at.
And that's what's going to drive your business. Because
Yep.
if you drive those KPIs, that will make you money, and that will be your focus to be more profitable and become more efficient.
Yep. Yep. Same way with like we were talking earlier with the receivables, how you're collecting those, right? Especially if you have a
Absolutely.
business where you're sending out invoices, those are invoice heavy businesses. Those ones where you send out an invoice after you do the work, you've already done the work and you send out an invoice, man, whew, you need to be looking at how you're collecting on those receivables. That's key.
It is, and it is key to survival. It is amazing because in a product based business, you got cash sitting on the shelf, then you're selling it to somebody, and maybe they got terms, and then now your cash flows out 60, 90 days, and you're now panicking.
I've seen it before. I've seen it before. You know, he pulling their hair out because of those terms. It's like, oh my lord,
So what? I
it's a
mean, I'm
bad
going to
deal.
ask this, and you don't have to
Yeah,
answer it, but
no, it's all good.
as CPAs, we all have that one client that come into your office and said, "Hey, this is what I want to do. Do you think it's a good idea?" Do you have one of those stories that you could share or you don't want to share? Because I know
I'll
you got one.
share. Yeah, I'll share. I actually get a couple things a lot of times. I'll tell you the thing that bothers me the most are the entity stuff. That bothers me the most. People set up entity after entity after entity, and they don't talk to anybody about that. So that bothers me the most, because entity structures have both tax and legal implications, right? So you need to talk to somebody about this stuff before you just keep setting these up. And I deal with people that I work with people that they have a business, a successful business. They have, they own real estate. They have multiple businesses. They own real estate. They got a whole bunch of stuff going on. So they're doing well for themselves, but they are sharp in their area, but they also feel like just because they're smart in their area that they can be smart and figure out the accounting stuff and tax stuff on their own too. you
Yeah.
know so then they start doing all of this stuff, and it just entity structures bother me, if you don't talk to a professional first prior to getting your structure together. So that bothers me. But to answer your question, I got a guy came in, he was he saw online, he was like, yeah, I can get this car, I heard I can write this car off in my business, it got to weigh this much and all of that good stuff, right? The whole G-Wagon thing. And
Yes.
you know he had a business where his profit was $30,000. He wanted to write off a truck that cost what was like $75,000 in his business. you know so I had to slow him down. I said, hey, we need to walk through a couple of things, just to kind of get his mind on the same page with me. I said, your business cannot afford to pay for this, this $76,000 truck that you're trying to pay for. That's one thing. You still have to pay for it. Yeah, but I heard I can save taxes. I hear you. You still have to be able to afford to pay for the loan on this thing. All right. Business is not there yet. You're doing great. You just started, all that good stuff. Also, what's the business use? Like, can we justify using it for business with, can we justify that? And he was like, well, sometimes, sometimes I go to the store and get some supplies and stuff. I said, that's not going to be good enough. That's not going to be good enough to justify to the government that we're going to take a $76,000. We're going to try to bonus depreciation, Section 179, all of this. That's not good enough. And the last thing that he said is that he doesn't want to keep the car. He want to get rid of it. He said, yeah, and after 3 years, I'll get rid of it. I'm like, okay. So I had to walk him through it. I said, so you mean to tell me there's a car that we have, or a truck that you're trying to purchase. You can't justify the business use. We just went through that exercise. He was just quiet the whole time when I was saying this. I said, you also can't, currently afford to pay the loan on it, right? And you're going to get rid of it in 3 years. I said, when you get rid of this car in 3 years, let's say we went through with it, which I would never do. We took this we accelerated depreciation on this car, right? We took that basis as far as we can down to almost to zero. You're going to sell it in 3 years for whatever you're going to sell it for. Your capital gains has been stretched out because your basis has been lowered so far. So now you're going to have a huge tax bill when you sell that vehicle in 3 years, like you told me you were going to do. All because you heard this strategy. And I think I got a video coming out. I made a video about this, but all because you heard this strategy that online that you can do. So he brought that to me. And once I kind of broke all of that down to him, and I had to write it, I had to like draw him like a illustration of it. I said, so we brought a $76,000 car, and we bonus depreciation section 179. We get it down to, it's going to give you this deduction. So I did the whole calculation, whiteboarded it out, and I said, we sold it for this much. Based on the amount of money that you make today and your tax rate, this is going to be your tax bill when you sell it. Now, does that make sense to buy this vehicle? He's like, well, the numbers said no. I was like, well, this is a no, man. It's a no. I got a million stories though. But yeah,
I'm sure.
that's always the fun one. The car thing is always the fun one.
Yeah. And I like it. One of my favorites is they come in and they want to open a restaurant or a bar.
Oh, man.
And the very first question I asked them is, have you ever ran a restaurant or a bar? And they go, no. I said, okay, that's it. No,
that's it.
No, don't even think about it.
Don't even waste your time on that. Yeah, restaurants are tough business. They are a tough business. Yeah, I got a couple clients that they don't have full blown restaurants, but they got like these little cafes and stuff like that, and it's tough work.
It's really stressful, and it's well, they say in the restaurant business, everything turns to crap. The food turns to crap. The real estate turns to, I mean, the equipment turns to crap.
Quickly.
Everything.
Yeah. Tough business.
It's tough. Yeah, I wouldn't do it. I wouldn't. Well,
yeah, I would.
Let me say this: I did do it and lost my butt. So hey,
got you.
Partner one time, and we lost our rear end, and we were lucky to get it.
Ooh, you got out at a good place though, right?
Yeah, absolutely.
Yeah,
I'm sorry,
man. Yeah, the restaurant business is a tough business. It's very, very difficult. So if you don't have any expertise, it doesn't even make sense to dive into it.
Oh no, they were stealing from us every day.
Yeah, yep. So yeah, that whole thing, it's just the risks. A lot of risks, it's too much. It's a lot to manage. I wouldn't know the first thing to do about it, with the restaurant.
Well, the arrogance takes over as it did for me. Okay, I ran 7 McDonald's restaurants, right? That's one thing. Fast food is one thing, and then they have a manual that's there that teach you everything you need to know. Not so much in a full service restaurant. So that you get arrogant, you get over and lost my rear end, but that's all right. I'm done with that part.
Hey, you recovered. It's all good.
Absolutely.
Yeah.
The last thing, I know you got to go, and I really appreciate your time, Ronnie. The one thing that I wanted to talk about that I've seen on your show, on your YouTube channel a lot, which the link will be in the description, and go subscribe and watch him. Great practical advice every day, or just about every day. I think you record almost every day.
Yeah, I put out a video almost every day, I think, except for like Sundays. That's the only day I don't put one out. Yeah.
Well, one of the things you talk about is passive income. Give people passive income isn't always passive.
That's right. That's right. Passive income. All right. Let me say this. This is a good one. So I always start with like the income types. I'm an income type person. Where you get your income from matters. It matters from a wealth building perspective, and it matters from a tax perspective. So that's very, very key. But passive income isn't what people think passive income is. People think that anything that they do outside their regular job is, that's just my passive income. They feel like that, no matter what it is. They're like, oh, that's just my passive income. The fact of the matter is this, or the reality is this. That's not what the government says is passive income. So that, even if you do YouTube, you got some AdSense revenue, you may sell a course or a book or something like that. It may seem passive because you don't always have to trade time for every transaction that you make, but it's not from a tax perspective. You're going to pay. And what I mean by that is how it's taxed. So I'll kind of leave with this, and this is my favorite stuff to talk about. Typically, there's 3 types of income. We got ordinary income. I like to call it earned income, active income. We got portfolio income, which is like stocks, capital gains from sale of stock, dividends, right? Things like that. And we got passive income. This is from a government perspective, tax code perspective. Passive income from a government perspective is rental property, rental income is passive. That's what the government says. Businesses that you don't materially participate in. Let's say if you're like a silent investor, you just put the money up, but somebody else runs it. Okay, that's considered passive income. Royalties was in that as well. These are passive income items from a tax perspective. It has nothing to do with, AdSense revenue from my YouTube business or my photography business that I started on the side. Just because you say side, it doesn't mean it's passive, and the reason why that's important is because how these things are taxed. I started with earned ordinary income. That's tax, federal income tax, state income tax, depending on the state, plus FICA, right? That FICA, Social Security and Medicare on top of that. Portfolio income doesn't have the FICA that you have to pay on that. So it's more favorable from a tax perspective. And you don't always have to trade time to get the money. You just have to make the investment. Okay. And passive income doesn't have the FICA on that either. My rental income that I get, I don't have to pay FICA on that either. Plus I get some depreciation and stuff like that. So it's kind of taxed a little more favorably than earned income. So it's important to kind of know that because you know how you're taxed. So you hear a lot of people start to argue about, hey, the wealthy don't pay tax and all of that type of stuff, right? You hear that a lot. You just got to sit back and think about, ask why though. Why? And there's a couple different reasons, couple different ways you can go about it. You can get political, all of that good stuff, but just look at it from a financial perspective. Why don't they pay a high tax rate on the income that they are receiving? It's because where they are receiving their income from, the income type. They like wealth items. They like assets. They like portfolio income items. They like passive income items. That's where they receive most of their income from. That's why they don't pay such a high tax rate on it. Whereas most people, we got the earned income stuff. We got the high W-2 jobs, even business, right? But business give you the write-offs though. So they kind of helps you out, so even if you got the self-employment tax on top of, the federal and state, you get to write stuff off. But high W-2 income is taxed, man, that's tough. Especially if you start making, you bringing in six figures, 200,000, 300,000, contributing to a 401k is not going to be enough to save you taxes at a certain point of time. So, where you get your income from matters. It matters from a wealth building perspective because you have to buy assets in order to build wealth. And it matters from a tax saving perspective as well. So income types, if y'all can master that stuff, y'all can kind of understand that, it's going to change your life.
So true. Ronnie, I can't tell you how much it is to have you on and how much I love your YouTube channel, and I appreciate it's not easy to produce content every single day. People don't understand that. I've had people come up to me 100 times and say, "Oh, I'm going to start a podcast." Okay, great. Just call me when it's on. It's not all that easy. It takes a lot of time and effort, and really, and it's I appreciate the time and energy you put into it. Thanks you for being on here, man. I really do appreciate it.
No, thank you for having me, Jason. I really appreciate you having me.
I love it. I know we could talk about old CPA war stories for days, but we got to end this, right?
Yeah.
Thank you, Ronnie, so much for being on, and I will talk to you soon.
Thank you. I appreciate you for having me.